Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Tuesday, July 12th, 2011. This morning I'm talking about fear rocks the markets. And, gosh, it's amazing. I take off like 1 day a year for vacation. And, of course, that's when all hell breaks loose. And that's what happened yesterday, of course. But obviously, my vacation was short-lived as I was sitting there watching the markets go. But fear's gripping the markets right now. We're taking a quick peek here at the Euro 30-minute chart. Okay, you can see Euro's been falling out of bed here. All right, had a brief bounce here when it just got under 140 yesterday, held that line, and then boom, bounced, and we are below now. Traded as low as 138.40 overnight. And what we've got going on now is we've got this debt crisis in Europe, the contagions going on. We don't even call it the Greek debt crisis anymore. They're an ancillary player. To be honest with you, I always just kind of thought they were. And, the way the EU went about, trying to handle this has just been one colossal screw-up from the beginning, and now they're running out of time to get this done. So what's going on now is you've got this contagion in the market where basically bond vigilantes are attacking bonds from Italy and from Spain, all right, driving yields higher, and it's going to make it harder for them to do their refunding operations. Now, just to be, make sure that you understand what's going on, all right? The situation isn't dire in Italy yet, all right? While yields have been pushed higher, it's not anywhere near up to, Greek or Portuguese or even Ireland levels, okay? But it is moving higher. And the problem is that Italy is Eurozone's third largest economy. All right, Spain is the fourth, and Italy has a huge debt load out there as a percentage of GDP. But somehow they've been able to kind of get by it and skate around it. But now the market's starting to turn focus on it. So these EU leaders need to come up with something real quick. But right now we're seeing euro lower, so that's decidedly put risk in the marketplace. All right, we've got a risk-off environment. We've got equity stock markets in Europe and Asia are much lower. All right, commodities lower. And stocks set to open lower here in the U.S. So we've got safe haven play going on here. Just want to look at dollar Swissy. All right, you can see that Swiss franc's actually strengthening more than dollar. Okay, dollar is still safe haven, but we've got Swiss franc is more favorable right now. And then we can also look at yen. I want to look at let's look at dollar yen here first. Okay, you can see dollar yen here. Boom, nice little sell-off here. All right, we got as low as just above 79 overnight. We're sitting just above 79.50. So there's some increased yen strength, and we can also look at let's see what we have out there. What did I want to look at? Euro Swissy. Okay, and you can see that euro made this is a new all-time low for euro versus the Swiss franc. So Swiss franc very much in demand. It's been strengthening, so that's really what we're seeing there. So, right now we can sort of throw the economic data out the window in that it really isn't that significant. Okay, there's nothing going on that's really going to change what's happening. This is really more about a much larger situation going on here and much bigger forces at play. And the two biggest forces obviously are the euro debt crisis. That's number one on everybody's minds. But also, we're talking about the debt ceiling debate here in the U.S. and these guys in politics, man, they're really pushing the envelope, and they're spooking the markets. They're not concerned. Everybody's pandering to their own political base, and they really don't understand the ramifications of their antics. And right now I feel like that's going to be the only thing that's going to give us a potential respite out of this risk-off environment. Okay, because right now, we talk about CDS, credit default swaps. They've actually been going higher on U.S. debt recently as well. So that's a situation where people are starting to say, "Hey, wait a second, U.S. default, man, that's a possibility," and that was unheard of in the past. And the fact that people are buying CDS, you never know. I mean, we saw this happen with Italy. I mean, Italy's CDS started going up, all right, just very quietly at first, and then all of a sudden more dramatically. And I told you about it, a couple weeks ago. Well, look what happens. Sure enough, a couple weeks later, here we are, Italy debt crisis. And that's how these things start. So these guys in Washington better get their act together. But focus back to Europe for a second. And it's uncertain what they're going to do there in Europe, how they're going to handle this one. I mean, they talked about we got to bounce off the bottoms with the euro here earlier this morning. All right, we can see right here we got down to that 138.40 level, and they announced that they were going to actually ECB was going to go ahead and take some of these bonds off some of these countries' hands, and that provided a temporary respite here. But you can see here, it looks like we're still trading under 20-period moving average. Probably going to retest these lows down here about 138.40ish. Okay, and you can see here, pound also. Boom, just a big sell-off here. It's not even worth looking at all the other things. We can look at Aussie, though. Aussie's probably selling off as well. Sure enough, Aussie. So we've got dollar strength, we've got yen strength, we have Swiss franc strength. Those are safe havens. That's what's happening. Just the other sort of fly in the ointment here to throw into place is China. And what China's going to do is China's slowing down, because if China starts to slow down, that's really going to affect the global economy. So a lot of converging events. Just go back to the pound here real quick. I know fundamentals don't mean much, but the CPI data in the UK did come in lower than expected, 4.2% versus 4.5%. All right, so maybe they are slowing down a little bit, and they're going to leave rates steady there in the UK for some time. So that's really what we're looking at here. We're going to get the minutes from the Fed meeting later today, but I can't see that doing anything. Tomorrow we're going to see Chinese GDP. All right, that may be helpful if China keeps their foot on the pedal, so to speak. But I don't see that happening either. And I really think we're in for some pain today in the marketplace. So that's what I'm looking at here today, folks. Everybody be careful, risk off. It can when you get these huge movements during the day, that can increase volatility as the ranges widen out. So some of these moves can be pretty fast and furious. So anyway, good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.